Hello everyone, this is Mohanad Yakout, Senior Market Analyst at Scope Markets, and this is the week ahead update for you. It's the beginning of a new trading week, 13th of July 2026. And of course, we have seen the big moves that took place by the beginning of the new trading week. We have seen the oil prices jump higher, although they are, retracing a little bit right now in the London session. However, big moves to start the week. Of course, we have seen what's been happening across the weekend of exchanging military action between the US and Iran again in the Middle East. Markets do really believe at the moment that this is just some military tension. However, they as for now, markets don't really price in a full scale war like what happened back in April and March period. This is basically as per what I can see in markets. This is why oil, yeah, it's trading higher. However, we haven't seen those 80 or 90 or $100 per barrel once again. Maybe we could see, maybe not. This week will definitely answer this question. We also have to look out for the CPI data out of the US economy coming out this week. We have the war and Warsh as well. We have the Congress testimony by Kevin Warsh basically throughout this week. Also, will he lay some ground for what's going to happen in the next Federal Reserve meeting? This is what markets want to see. And of course, we will be having a look on the Q2 earnings scheduled for this week. We do have a couple of big names in the banking and the finance sector as well. Let's have a look on that. And of course, we will be ending the video with a full technical analysis show where we will discuss the key supply and demand levels, of course, that you need to keep an eye on, and what are the make or break levels. So buckle up and let's dive straight into it. First and foremost, let's have a look on the economic agenda for this week ahead. And basically today, Monday, we don't have really high risk events or big ticket events, which is normally how Monday works. We start the week on a softer tone when it comes to the economic data on the agenda. However, moving on to Tuesday, tomorrow, we do have a couple of really important data coming out from the Chinese economy, including the balance of trade, exports, and imports. And then we move on to the US session here, where we have the inflation numbers expected out of the US economy. Basically, markets are expecting that the spring inflation that we have seen during the last couple of reports to move lower a little bit. So when we look at the inflation rate on a yearly basis for the month of June, expectations here point to 3.8 or 3.9%, which is a little bit lower than the last one that we have seen in May, around 4.2%. So the core inflation is still expected to remain around the same level. Probably one of the reasons why inflation rate also is expected to move a little bit lower is that oil prices are well below the levels that we have seen in April and May as well. So will oil prices drive the headline inflation a little bit lower to 3.8%? However, I think markets will be more focused on the core inflation rate, which is still expected to come around the same levels of 2.9%, pretty high numbers for the target set by the Federal Reserve, which is really something good to have those inflation numbers right before the testimony by Federal Chairman Kevin Warsh in front of the Congress Banking and Committee. So basically, markets would want to know how the inflation numbers come out during this week and what will be the answers to a lot of questions that will be pointed towards Kevin Warsh by the congressman. Basically, what's the level of inflation that he's happy to see? What's the level of unemployment? Because previously, during Jerome Powell's era, anywhere between 4 and 4.5% for the unemployment rate was considered a little bit comfortable for the Federal Reserve. Anything higher than 4.5% started to ring some bells. What are the levels for the current Federal Reserve chairman that he's happy to see in the US economy? This will be one of the questions, of course, that will be asked, and markets will want to know the answer. Moving on to Wednesday here, we will, of course, have the PPI numbers, producer price index. Of course, we still have couple of key data coming out from the Chinese economy, retail sales, industrial production, and the GDP for the second quarter of the year 2026. However, the big thing to watch on Wednesday, of course, will be the second day of the testimony in front of the Congress by Kevin Warsh and another interest rate fix by the Bank of Canada is expected on the Canadian dollar. Uh, will we see any sort of forward guidance from that meeting? This is something that also markets would want to know and price in for the future movements in the Canadian dollar. On Thursday, retail sales by the US economy. I don't really think after a couple of more important days like Tuesday and Wednesday, retail sales, yeah, it's important. We might see some, spikes of volatility there. However, it isn't really something that markets are anticipating or highly waiting to see. And we also have the GDP by the London session from the British economy for the month of May. And a slight uptick of 0.1% is expected there after the downward move of 0.1% in the month before. And we end the week on Friday, 17th of July. A couple of data from the US economy, housing permits or housing starts and building permits. Okay, pretty much a light end to the week. However, let's have a look also on the earnings scheduled for this week. Again, we start pretty easy with Monday. Starting Tuesday, we do have a couple of big names announcing their earnings and results for the second quarter of this year, 2026. And it's all, regarding the banking and finance sector, JP Morgan, Bank of America, Goldman Sachs, Citigroup, and we also have Morgan Stanley on Wednesday. And yeah, this is something markets would like to see. And generally, markets, when we talk about the earnings, they don't really focus on one single number, of course, except the big seven, and of course, numbers like Nvidia or stuff. However, but when it comes to, majority of stocks, markets will want to see how the majority of the earnings are performing, and this is how basically we can expect to trade on the S&P and other indices as well. So I would say give it some time. By the end of the week, when we have the majority of those results, we'll then start to know, okay, well, they went mostly positive or mostly negative, and this is how we can, strategize our trading on the US indices moving forwards. On Thursday as well, we do have Netflix, United Health. Yeah, and that would be it for me for the earnings results. Well, let's have a look on the technical analysis here. And starting off with the dollar index here, we can see that basically the dollar index is still holding above the key levels of demand that we previously mentioned in our last week's video. The levels between 100.20 and the 100.60 tough levels of demand. Even if you are someone who trades with the trend lines, while I personally don't really trade with trend lines, however, we can see here that the lows formed here around May, beginning of May, mid-May, and as well as mid-June, this is a trend line that's coming here to a test, right? So this is a clear level of, buying interest on the dollar index around the levels of 100.60. We have bounced off once. Oh, sorry. We have bounced off once here, and the second time was on the 10th of July. And I can see that slowly the price action on the dollar index is moving from a move lower to a move in a sideways range. So I do expect the dollar index to try and test those levels again during this week. And if those levels of support, which is something I personally expect to hold, I do expect that the next leg higher is going to test the highs around the 101.75. The slow shift in sentiment on the dollar index from a lower move or a downward move to a sideways range. This is what we call as an accumulation phase to move higher. And don't really forget that all of this move is basically a retracement in a clear upward trend. So we move higher, retracement, another move higher, retracement, third and the last move higher, retracement, and we can expect the move to move higher. So it's a clear uptrend, especially if the war intensifies in the Middle East, because we have seen the playbook on how to trade the recent war in the Middle East, and basically the dollar index or the dollar is the number one safe haven for such a scenario. So if this basically happened, we can expect to see this upward move on the dollar play out. Moving on to the euro versus the dollar, I wouldn't really explain and dive too much because pretty much everything that I've just explained on the dollar is on the euro versus the dollar. However, it's on the opposite side. Again, a move higher followed by a sideways move, levels of resistance. We might test again, a move again to levels of the last low of 1.1330 is something I can expect to see during this week. Again, this is a retracement or an upward correction in a clear downward trend. So 1, 2, 3, 4, and this is how the trend goes. So I'm expecting to see a continuation lower on the euro versus the dollar. Again, on the pound versus the dollar, we are already trading inside really powerful areas of supply around the 1.3440-ish. And we can see clearly here that when it comes to the momentum, we can see a clear bearish divergence. So prices are moving higher, momentum is moving lower. This is one of the early signals that it's basically one of the only leading indicators in the market when prices are moving in a way and momentum is moving in another way. This is to tell you that basically we can expect to see a reversal of the last move. So the last move was higher, you get a bearish divergence around the levels of supply. A move lower is what I basically expect. Nothing pretty much happening on the dollar versus the Japanese yen. We are still stuck between supply and demand here, waiting for further comments by Japanese officials or for the Japanese yen to continue depreciating in value and to see the dollar versus the Japanese yen moving higher. However, if you really want to trade during the week on the Japanese and the dollar versus the Japanese yen, just know that those are your levels here. You have the levels of demand around 161.40, levels of supply around 162.30, and just wait for the ping pong trade to take place. So that's one. We can expect a 2 and so on. This is what we can expect to see, especially that in the middle of this range, we do have an equilibrium price here previously that we have seen some volatility around 1, 2, and 3. So in between those equilibrium prices or the ping pong trades, we can expect to see something like this. Anyway, don't trade from a support or resistance without first waiting for the price action to confirm your bias. Moving on to gold on the 4-hour time frame here. I still stick to the medium and the long-term bullish bias on gold prices. However, the key question to answer right now is that where are the possible buying levels? For me, it's basically either the levels of $40,070 per ounce or the 3,980. I can see that the gold prices right now are trying to hold around the levels of the demand, 4,070. So in case this candle basically closes in a positive bullish manner, I can expect to see a move higher to 4,136. A break above is basically the one-way ticket to move higher. However, given all of the indecision in markets right now, CPI inflation coming out, testimony by Kevin Warsh, We don't really know what's gonna happen in the Middle East. So if I can really expect markets to move in a sideways range, so my levels would be around 4,070, 4,136. Those would be the levels for this week. Of course, a break lower, as we said, we have the next buying area around 3,985. WTI crude basically is doing pretty much nothing right now. We have seen this jump higher by the beginning of the new trading week. Of course, we are stopping now in the London session to close this gap. The key level for me to watch today and this week is basically the $72 per barrel. If prices manage to hold above, another move higher to 76.40 is what we can expect. However, trading oil with technicals right now is highly risky because it all depends to what's happening with the war updates and Donald Trump's Truth Social account and comments. That was it for today's video. Thank you so much for watching this, and we'll catch you guys in the next week ahead. Thank you and stay safe.